Mr. Naveen?
Yeah, good evening, sir. Are we good to start?
Yeah, we are ready.
Yeah, so sir, we have about 64 participants. I think we can start, sir. So I'll just make the opening comments and then I'll just welcome everyone and I'll hand over the floor to you. I'll just make the announcement shortly. Okay, we start. So good evening, everyone. On behalf of ICICI Securities, I welcome you all to the Q2 FY24 earnings call of the Ramco Cements Limited. From the management, we have with us Chairman Shri M.F. Farooqui, CEO Shri A.V. Dharmakrishnan, and CFO Shri S. Vaidyanathan. We will start the call with opening comments by the management, followed by interactive Q&A. So without any further ado, I hand over the call to the management for their opening comments. Over to you, sir.
Thank you very much. Good evening, everyone. We very warmly welcome all of you to the earnings call of Ramco Cement to discuss unaudited results for second quarter of financial year 2023-24. We hope you would have seen our results and updates by this time. The cement demand has been strong, but the prices have been under constant pressure during this quarter. Prices have improved in October 23, and I hope it sustains. The key highlights of our performance for the current quarter is sale of cement has improved to 4.61 million tons compared to 3.35 million tons in the corresponding period, with a growth of 38%. The share of premium products has improved to 28% in the current quarter from 25% in the corresponding period. The cement utilization rate for the current quarter is 82% as against 66% in the corresponding period. Net revenue for the current quarter is rupees 2,343 crores as against rupees 1,793 crores with a growth of 31%. EBITDA for the current quarter is rupees 412 crores as against rupees 193 crores in the corresponding period last year. EBITDA margin for the current quarter is 18% as against 11% in the corresponding period. Blended EBITDA per ton for current quarter is rupees 894 as against rupees 575 in the corresponding period. Profit before tax for current quarter is rupees 138 crores as against rupees 16 crores in the corresponding period last year. The power and fuel cost per ton of cement for current year second quarter has decreased to rupees 1,358 from rupees 1,989 in the corresponding previous year period. The change in utility of sale of wind power to captive use has helped to reduce the overall power cost. The overall green power usage has significantly improved to 38% during the quarter from 22% in the corresponding period, thanks to the wind power usage for captive purposes and the waste heat recovery system WHRS. The green power share is likely to reach 40% for the financial year 24 and 45% in the financial year 25. Coming to fuel prices, the spot CIF prices of pet coke was as low as $104 in June 23, but slowly has gone up to $138 now. The pet coke prices are key to watch. Our pet coke consumption for the current quarter stands at 53%. Due to commissioning of Kolimigundla Integrated Unit, RR Line 3, and dry mortar plants in RR Nagar and Salem, the interest cost and depreciation has gone up to rupees 117 crores and rupees 157 crores respectively for the current quarter. With regard to the status of capacity expansion in Kolimigundla, TPP of 18 megawatt will be commissioned during December 2023 and railway siding will be commissioned during June 2024. Expansion of capacity of dry mix products in AP and Orissa will be commissioned during December 2023. Expansion of grinding plant from 0.9 MTPA to 1.8 MTPA in Orissa is expected to be commissioned during January 2024. During the current quarter, the company has incurred rupees 941 crores towards capex, including the purchase of limestone-bearing lands in Andhra Pradesh and Karnataka. The net debt as on 30th September 2023 is rupees 4,966 crores. With this, I would conclude my opening remarks. We are open to questions now. You are welcome to pose your questions. And indeed, before parting, I'd like to wish all of you a very, very happy Diwali.
Yeah. Great. Thank you so much, sir, for the opening comments. Should we begin the Q&A?
Yes, please.
Great. So, ladies and gentlemen, we'll start the Q&A. Please press the show of hand icon. We already have 3 participants for the Q&A. First, we start with Amit Murarka. Amit, go ahead, unmute yourself and ask your question.
Yes, hi. Am I audible?
Yeah, you're audible, Ms. Amit.
Yeah, hi. So the first question is on capex actually. So I see from the balance sheet that 1225 crores has been spent in the first half. I believe we were looking at like 850-900 crores for FY24. Where do we stand now on the capex for FY24? And could you explain the reasons for the spend being so much higher than the expected numbers?
Mainly because already we have given our notes also, it includes the purchase of land in both Andhra Pradesh as well as in Karnataka. Otherwise, all other capital expenditures in line with what we have expected.
Could you quantify that amount? So how much would that amount be?
Sorry, we can't quantify the value of the lands.
If 1225 is the number, even if I take like a 500-600 crore for the land, then even then it's like a 600 crore capex for first half.
Sorry, I don't want to elaborate. Okay, maybe whenever other party is elaborating the details, we will give you the details. As of now, I can't give you the details. Sorry.
Okay. And for full year, then what should we expect? Like including this 1225, what should we think of full year now?
Maybe another 300 to 350 crores.
Okay, sure, got it. And your clinker utilization, I believe now is almost like 92-93%. And there is no planned clinker addition at this point in time. So should we then expect like FY25 in that case to be a low single digit volume growth here now?
We will announce soon. Whatever the clinker expansion plans, we will announce soon after we are calling for another board meeting. Whenever we discuss, we'll announce the details.
And the order of priority would remain the same. I think Kurnool is...
Kurnool second line will be the first priority.
And lastly, just around the debt levels, like we've seen a consistent increase in debt for the last 3 years. I'm sure, too many questions have been asked on this to you. But still, like, what is the target we can think of for March 24 and March 25 now?
This is the maximum debt. We will not go beyond this.
But like deleveraging, like in the second half, can we expect like 400-500 crores, or do you think that
400-500 crores may not be possible? Definitely, we will focus on deleveraging.
Sure, I'll come back in the queue. Thanks. Yeah.
Thanks, Amit. Please mute yourself. We have the next question from Indrajit Agarwal. Indrajit, please unmute yourself and go ahead, please.
Yeah, hi. Thank you for the opportunity. I have a couple of questions. First, going back to the land acquisition that we have done, is it more for the expansion of capacities or will it only augment the current limestone block? So can we assume that this will enable us to add more capacities, or just for reinforcing whatever we have right now?
So these mines are very near to our factory. Number one. Number two, definitely it will augment our limestone reserve by another 140 million tons of limestone reserves available. The main reason we bought is it is very near to our factory. Just adjacent. It is adjacent to our compound wall.
Sure. And if you can help us understand what is the remaining capex on the ongoing projects, not for the new projects, but for the ongoing projects, just to get a sense that what kind of capex we can see in FY25.
Ongoing projects will be again, another maybe 100 to 200 crores. Otherwise, almost everything is complete. Before this year,
I missed the number.
Maybe another 200 crores.
Right.
Only ongoing projects I'm telling. Maybe we will go for some WHRS also. We are planning in Tamil Nadu plant. Those things we will announce. Maybe in another board meeting we will announce. See, previously we thought there's no more chances for WHRS in Tamil Nadu units. Now we are able to find that we can put up some WHRS units in Tamil Nadu plants also. If those things are crystallized, then my CapEx expenditure will be maybe megawatt, maybe around 5-6 crores we have to spend. Maybe around 100 to 150 crores we have to spend on WHRS if necessary and possible.
Sure. This is helpful. And lastly, one more question on expansion, right? While you'll say that you will come back with more details, but is there a thought process of expanding out of south and east, maybe north or west, any of the other regions we are evaluating, or any progress on that we have?
So now we don't have any mining leads in those areas, so it is not possible. So we also participated in many bids, but we are not successful. Maybe whenever the new mining bids coming, we'll be participating in that. If we are able to get, definitely there is a possibility we want to diversify into different geographies also. But as you already been informed to you, we got one mining asset in Karnataka. We are in the process of buying land there also. Okay, once the land is completed, then we can enter into Western markets also.
Sure. Thank you. That's all from my side.
Thanks. Next in line is Shravan Shah. Shravan, please go ahead with your question.
Hi. Thank you for the opportunity. So first is on the pricing front. How much October prices what we have seen? So how much till now we have seen the prices getting absorbed, and is there a possibility because in November festivity season, how much more rollback is possible, and if at all happens, and by December can we again able to take a price hike?
See, these are very hypothetical questions. You will be knowing better than even what I say, because already many earning calls you might have attended. See, the pricing scenario is very, very dynamic. See, definitely in October there is a significant price increase compared to second quarter, but I can't quantify. Definitely there is a significant price increase in October. November, as on today, whatever price increase we have done in October, that is sustaining. We have plans to increase the prices depending upon the market situation. Okay, I can't tell you, what will be quantum in different months, different period. It will be very, very difficult to say, the dynamics of the market.
Okay. And in terms of the volume, so first half we have done 33% kind of growth. So how one can look at the second half in terms of the volume growth?
Same trend we try to maintain. Whatever we have done the first 6 months, we try to repeat in the second 6 months also.
And the wind power that now we are using for our own consumption. So if you can help us in terms of quantifying for this quarter. So previously it used to show as a revenue, and now that revenue is not there, and that's why maybe the realization is also looking slightly more a decline, and we are seeing a saving on the cost. So if you can help us, how much saving because of this change in the shift from sale to the captive use?
100% whatever we were selling to the grid as far as the group captive, that is converted into self-consumption now, captive consumption now. So you can, whatever we are going to consume, we can take around 1.5 rupees saving. Again, it all depends upon the coal prices. What was alternative? Alternative was thermal power plant. If the coal prices were very high, like example last year, first quarter, second quarter, where the coal prices were some $200, then saving might have been much higher. So now the coal prices come down significantly. So to that extent, benefit may not be that much. So again, advantage is number one towards cost reduction. Number two, okay, without making any further investment, our green power will go up. So that is the purpose for which we converted from sale to the power into the captive.
Okay. And why, got it. And why our AFR share, if we look at 1H versus 1H, has now reduced to 7%, which used to be 13-14%. So is there any issue in terms of the sourcing the AFR?
Cost. Even the coal price of $200, the AFR looks attractive, the cost looks attractive. When the coal price comes down, when this AFR price does not come down, we don't have significant advantage over AFR.
Okay, got it. And thank you, sir.
Thank you.
Thank you. Next is Satyadeep Jain.
Hi, am I audible?
Yeah, you're audible, Mr. Jain.
Hi, yes, sir. A few questions on just on the follow-up on the land acquisition. I believe the company already has a sizable land in Kurnool, both mining and plant land. So most of the new acquisition you've done would be Karnataka, I would imagine, right?
Sorry, you're not little audible.
Most of the, I believe, Kurnool already had sizable land position in Kurnool. This new acquisition you've done, most of it would be Karnataka, I imagine, right?
No, most of things are from Kurnool, Andhra Pradesh. What we bought from Prism, that already we informed stock exchange. You might also read all these things in the papers. We have sizable, no doubt we have sizable reserves, but today, whatever mining, whatever we got is already bidded, already whatever they are owning, Prism is owning the land. The mining is also varied up to 2050. So that is the attractive of this buying this land.
So you're saying most of the new acquisition is Kurnool additional acquisition?
Yeah, you're right. Yes.
Okay. On so Kurnool, given you're hitting capacity constraints soon, and as you mentioned, board may look at expansion. If I understand correctly, putting up new kiln would at least take another, whenever you make that announcement, 24 months. Would that be the same timeline we look at Kurnool for the next line?
It may not take that much time because already most of the infrastructure has been created. What is needed is only equipments rather than infrastructure, like silos for the clinker, silos for the cement, packing material, all these, and many of the limestone storage cells have been already created for the second line. See, that is why our capital cost for the first line also little elevated. So the second for the second line, what is needed is only the bare equipments like raw mill, cold mill, and kiln. All other infrastructure have been already created. So it will not take that much time.
So I believe if you mentioned $40 per ton capex, so can we assume similar capex and possibly commissioning as soon as 1 year from the board announcement? Would that be
12 to 15 months is possible because we have to go through that environmental clearances also. Otherwise, 12 to 15 months is definitely possible.
Just one last quick question on the volume growth, exceptionally strong volume growth. You historically had mentioned 25% mix in East and 75. Is that similar mix? And are you, given the volume growth, you're taking significant market share? Is that market share also largely on non-trade? Any additional insights on just the volume mix and product mix and all?
In fact, volume growth in South is a little higher than the East this time. It's not 75-25, it's around 78-22 like that. And see, the trade and non-trade, there's no big difference. Let us not, merely because we have done in non-trade, trade is big, nothing like that. Wherever we have good realization, we will be selling that. And we have any number of times we also told since we are making very special products, certain projects prefer our cement. That is why the volume is also, we have very good growth. We continue to focus on that whatever the right cement for right applications, since these are all application-based cement we are manufacturing, certain applications, certain project definitely prefer our cement. There we have strong growth.
Thank you so much.
Thanks. Raghav Maheshwari is next in queue. Raghav, go ahead, please.
Sir, firstly, congratulations on good set of a volume growth. I think your right application of right product is right now the working very well for you. Sir, my question is from you. At the end of FY25, our cement capacity will be around 24 million ton and clinker around 14.23 million ton. Is it the understanding correct?
You're right. You are right.
Sir, what is our current CC ratio is right now?
See, the CC ratio is around 1.3.
1 point. So then we should now if we go for, if we map our cement and the clinker capacity, then it's showing some at a higher side, 1.7 around, according to the capacity wise, which is under construction also. So in the near term, what we have to, how we should look, we are going for a more clinker expansion, or there is some more scope in this, because you are primarily in the southern market key player. So there is a improve of the CC ratio is also possible.
CC ratio definitely improvement is possible, 100% is possible. Number two, we are also debottlenecking some almost in all the kilns. That will also increase our clinker capacity by 1 million tons possible.
Okay. And
only thing it may take some little longer stoppages. So now we are not able to stop the kiln. That is why we are not taking that.
Right.
Hence, wherever possible, little maybe 15 to 20 days stoppages are possible. Definitely, we can. Possibility of increasing capacity of clinker by another 0.7 to 1 million ton.
Sir, from our existing clinker capacity, what's the best case scenario you can see for a cement? How much we can make from the current clinker capacity if it goes for the
around 22 to 23 million ton, depending upon my OPCP blended cement ratio.
Okay, sir. And sir, one question from the right product and the right application. Basically, the all right products for the right application is primarily the blended base, or it's an OPC base also. Just
Both.
wanted to understand.
Both.
And which segment is growing very faster in the premium product, OPC based or the PPC based?
Both is growing.
Got it. Sir.
See, for example, in blended cement, our Ramco Super Crete, that is the cement suitable for concrete. For individual houses, that is growing nicely. And OPC certain infra projects also growing nicely.
Got it. And sir, from the Karnataka and the Kurnool new clinker line at Kurnool line 2 and the new expansion will in Karnataka, what's your first preference? It's Kurnool line?
Kurnool second line.
Kurnool second line.
Because that we can make it at very
faster.
Very fast also, very nominal, very cheap.
Yes.
Around $30-40 we can do it. Even cheaper than that, if possible, we will do it.
Got it, sir. And sir, last question from the eastern market side, the premium products in the southern market, which you are gaining continuously the market share. Can you highlight some onto the eastern market also? How is the eastern market responding for the premium products?
The eastern market also, certain infrastructure projects, we are exclusive suppliers.
Okay. Got it, sir. Okay, sir. Thank you from my side.
Thank you.
Thanks, Raghav. We have a follow-up from Amit Murarka. Amit, go ahead, please.
Yeah, hi. Just a question on power and fuel. I see that in rupees kcal, the fuel cost has dropped, I think, 12-13% QOQ. But the power and fuel cost number seems to have dropped by almost like 24-25% QOQ. So could you just help bridge that gap in the two?
Sorry? Yeah, we are explaining to you now. See, this WHRS full benefit we got this year. Also, wind power we got a full benefit even from June, not even for the full year. See, these things, okay, power per KL is different from what I consumed also now. You can't directly correlate both.
No, my only purpose of asking that is, should I take this rupees per ton power and fuel as a run rate now, or should I adjust for some?
Second quarter, whatever cost you can take for the third quarter also. power, I'm telling the cost per KL.
Okay, and I believe in the second half, the wind power is not available. So to that extent, like 50-60 rupees per ton cost will go up, right?
But WHRs will get full benefit. If certain WHR was commissioned only part of the year, you will get full benefit.
Sure. And just one question on Kurnool expansion, like you say $30-40 per ton capex cost. Like, so that would only be equipment cost, right? There would still be some EPC cost, some contractor cost, some civil cost beyond that as well, right?
No, that is why I was telling you most of the civil cost is already incurred. For example, what is needed? Silos. Clinker silo, see, we have for 150,000 tons. In other plants, we have 30-40,000 tons. So there's no need for clinker silo. There's no need for cement silos. There's no need for investment in backers. There's no need for investment in stacker reclaimers for raw materials. See, most of the investment has been already made for the second line also.
Right. But waste heat you will have to put up, right? That will still be an extra cost.
Which one? Waste heat. Yeah, waste heat recovery will put. You're right. Waste heat recovery will put. We have to put.
Okay. Also, just a thought which I wanted to check with you. Like we understand that Tamil Nadu has got low limestone reserves and the auctions are getting delayed perpetually. So, like, is there some like plan B which you are trying to do over here by acquiring land in AP Telangana, setting up more capacities there so that at least you can feed the market from that belt in case these auctions continue to get delayed?
We have enough limestone reserves in Jaindipuram as well as in Kurnool.
Yeah, but that's less than 10 years. Right?
No. We have enough reserves. Okay. No. Kurnool, for example, but that is why I explained.
Not Kurnool, sorry, I meant Tamil Nadu.
No, that is why I'm telling to you. You are asking plan B. Whether I have to acquire more lands or put up more plan. This one in Andhra Pradesh, Telangana. That is why I'm telling to you. We have already enough land available. Mining is available in both Jaindipuram plant as well as in Kurnool plant. I can expand more there and send clinker here or limestone here, whatever possible. Both we can do or cement here.
So that is a plan B then, basically, in case the TN reserve issue gets delayed further.
Yeah, that is the only thing possible now.
Got it. Thanks a lot. Yeah.
Thank you. Next is a follow-up again from Shravan Shah. Shravan, go ahead.
Yeah, thank you. Sir, first is finance cost and depreciation. Definitely, we mentioned the region. Just trying to understand this quarterly run rate, what we have reported, both depreciation and finance cost. Will it remain or likely to even inch up further in third and fourth quarter?
Quarterly, another 10 crores increase is possible.
Both in
interest.
Sorry, sir. Sorry, sir. Hello.
Hello.
Yeah, sir. I was not able to hear. I was trying to 10 crore increase in both depreciation and finance cost. That's what you are trying.
Interest alone 10 crores definitely will go up. And what is the depreciation?
Depreciation projection is 620 crores for the full year.
Depreciation projected for next year is 600 crores.
Okay. 600 crore. And second, just trying to understand when we are saying that our preference is the Kurnool second line, and if the Tamil Nadu limestone doesn't work and the plan B is there, so the land acquisition that we have done from the Prism, so there definitely then we will be looking to add a clinker line there.
Yeah, as you rightly told, it's a plan B.
Okay. Got it. Thank you, sir. I'm done. Thank you.
Hello, sir. Hi. So the next question is from Patanjali Srinivasan. Please go ahead.
Hello, am I audible, sir?
Yeah, you're audible, Mr.
Yeah, sir. So, firstly, on the capex, I'd like to know what your capex number will be for FY24 and FY25.
FY24, it will be around 1,200 crores.
1,200 crores additionally, you're
Yes.
saying, sir?
Yeah, including land, whatever we purchase,
Okay.
it will be 1,200.
Sir, but you've already done.
Sorry. It is 1,600 crores. Sorry, it will be 1,600 crores. Sorry.
Okay, sir. And for the next year, sir?
It will be around, I told you, see, for the existing, whatever I have planned, it will be around 200 crores, 200 to 250 crores.
Okay. Got it, sir. Sir, and one more thing, with respect to regions, like between East and South, what is the expansion-based decision that we are trying to take? Because right now, from a capacity mix, we are strongly aligned towards South. But I think from a volume sales mix, we might still have better volume in East. So, are we trying to enter East by adding another uh, plant or grinding unit in that region?
In the East, the integrated plant is not possible because no limestone is available. See, whatever the possibilities, only putting up grinding unit. See, already in Vizag we have 2 lines. In Orissa we are putting up second line, and in Calcutta also already we have two lines. So we can grind another 2.5 million tons in both Orissa as well as Bengal units.
Yes, sir. So,
and the ratio would be around 70-30. You can take around 70% will be south and 30%. The capacity I'm telling you, actual sales may be east, maybe around 25-75, but the capacity will be around 70-30.
Okay, sir.
Because we want to have little more capacity east because the distance is high. So the railway wagons will be available in all these things. So capacity wise, it will be 70-30.
Okay, sir. Got it, sir. Sir, and just one last question. This trade-off between volume and pricing. So I think for us, we were a little bit more of volume focused in this quarter. So how do we take these decisions, and what is the reason behind this?
So these are very dynamics based on, I can't tell you today I'm going to concentrate only on volume. I can't tell you I will concentrate only on price. It all depends upon dynamics of the demand and supply, how my co-producers behave. It all depends upon many dynamics. I can't tell you this is going to be my particular strategy. Nobody can say that. No particular individual company will say, no, this is going to be my strategy.
No, so that part is fair, sir. But the concern is when capacity is coming in a very lumpy way, we're not too sure as to how sustainable the capacity addition is going to be for companies at a ROC level.
So it all depends upon your cash flow. If your cash flow is strong, then you'll concentrate on creating the capacity, wait for the market. The cash flows are not strong, then I have to align with my cash flow to create the capacities.
Okay, sir. So just last question. There's no realization from sale of power in this quarter, right?
No, some 3-4 crores, not big.
Okay, but substantially our net sales or realization from cement.
Because the windmill normally generates from May 15th. Here we made it that from sale to board, we converted into captive from June 1st.
Okay, sir.
So whatever the sale between April to May, the small quantity we sold to the grid.
Okay, sir. Thank you, sir.
Thank you. We have a next question from Mr. Raghav Maheshwari. Please go ahead.
Sir, my question is right now, our green mix power is 38%. what you are indicating that we are also looking for adding WHRS for our Tamil Nadu based plant. So if we succeed into the setup at Tamil Nadu based plants on the WHRS, then what should be the target for the green power?
Be around 54%. See, whatever WHRS today and wind power, they are projecting to go up to 40% in 24 and 45% in 25.
Okay.
Existing capacity. Whatever WHRS today and wind power today. And whatever we are planning, another 14 megawatt of WHRS we are planning from Tamil Nadu plants.
Okay.
That will increase our green power to around 54%. Sorry, 50 to 52%.
So basically FY26 we can assume till 52 is an achievable number for a green power side.
Yeah, or end of 25 also possible. But not before end of last quarter of 25. Last quarter 25 or beginning of 25-26 possible.
Got it, sir. And sir, one question from the expansion plan. Now we are still on for the grinding unit projects in the South Maharashtra, which we are earlier looking with the Kurnool clinkerization unit. Its plan is still on, or now we are not taking Maharashtra option as a first of the choice?
As of now, we are not taking any action on acquiring any land in Maharashtra.
So whatever Kurnool clinker will come, it's primarily for the southern and the eastern markets only, right?
Yeah, you're right.
Does we need any cement capacity expansion also? Yeah, our current cement capacity is sufficient to serve this to absorb this clinker?
No, we will be increasing capacity in Kurnool also. Cement capacity will be increasing before adding the clinker capacity.
1 million ton is already under construction, right?
Yeah. With that only I'm telling.
Okay. Yes. So actually, out of 24 million tons, 1 million ton is already into that, na? Kurnool one?
No, it does not include that.
Okay, so after Kurnool, your capacity will be 25 million ton.
Yeah, cement grinding.
Cement grinding capacity.
Yeah.
Yes. Got it, sir. Thank you very much, sir.
Thank you. We think that we have a follow-up question from Mr. Shravan Shah. Shravan, please go ahead.
Yeah. Sir, just to clarify, so currently our capacity is cement capacity is 22 million ton, 0.9 million ton Odisha will come, so that will take to 22.9, and with the Kurnool grinding, if whenever we will take that will take to a 25 million ton. So close to 2.5 million ton grinding will be there for Kurnool. Is the that's the okay? And for the clinker,
I tell you another this one. There are certain raw mills are available in our factory, which is not needed now, because we have put up additional raw mills in different factories. Those raw mills can also be converted into cement mill with some investments. For example, in Jainapuram, one raw mill today it is stopped, but it's working condition. And we've gone for a new line, we've gone for bigger raw mill. So today the raw mill is stopped. Like that, in different factories also we have raw mills available, which is not being used now, but these are working conditions with some investments like conveying equipments. I can convert into cement mill also. So with that only I'm telling I can go up to 25.
Okay, and for clinker capacity, so correct me if I'm wrong. Existing is 14.94, so 15 million ton clinker. So that will become how much, sir? You mentioned some number.
Around 15.5 to 16.
Okay. Got it. Thank you, sir.
Thank you. We have a follow-up question with Mr. Raghav Maheshwari. Raghav, please proceed.
Sir, one question from the pricing front. Firstly, we saw the price collapse, particularly in the Tamil Nadu in the month of the March, which again started to raise till some level from the October. and I think it's in my understanding, I saw this is the first time in decade where the Tamil Nadu prices are lower compared to the AP or the Telangana based players. So how will you see the pricing right now and for the future and for this financial year, particularly for the Tamil Nadu and Kerala markets?
As of now, it is much better than the second quarter, beginning of the second quarter. See, we confident that trend will continue. That is why I'm telling you, it is very, very dynamic. We can't tell you a particular this one, okay, this can be the trend like that. I can't commit.
But Tamil Nadu prices, you think, sir, should be better compared to again AP and Telangana, which was the earlier case?
So do you mean to say Tamil Nadu prices today lower than Andhra and Telangana? That is your understanding?
No, not today, but sir, 4-5 months before this is the
Even 4-5 months, never it was lower than Andhra and Telangana. That much you can show.
Okay, sir.
Tamil Nadu prices were never been lower than Andhra and Telangana.
Okay.
At least my brand and leading brands. Not only my brand, the leading brands.
Right, sir. Got it, sir. Thank you, sir.
Thank you. We have our next question from Mr. Patanjali Srinivas. Please go ahead.
Sir, I've already asked my question. Thank you.
Okay. We have a next question from Mr. Amit Murarka. Please go ahead.
Yeah, hi. Thanks for the follow-up. Just wanted to get some update on the Karnataka project also. I believe you already had some limestone and then you're acquiring land as well. So if Kurnool is going to the priority, then should we then expect like Karnataka project to be taken up only like post FY26?
Yeah, 25-26 we may start. Yeah, you are right. Because we have to acquire the land first. We are in the process of acquiring land. Then we have to go for clearances. So definitely to take minimum 2 to 3 years.
All right. And sorry, I didn't get it properly. You said that your green energy could go from 45 to 52% based on which new projects you said?
WHRS in RR Nagar and Tamil Nadu plants.
Okay, you plan to set up new WHRS. And how much will be the capacity for that?
It will be around 15 megawatt.
Sure. So after that, like you will be maxed out on our waste heat potential, right?
Then Kurnool second line, whenever we put up WHRS is possible.
Yeah, I mean on existing capacities basically.
Yeah. Existing capacity is in max.
Right. And just one question on your CC ratio, like you sell like 20% of your volumes in East, which is generally seen like a 1.9x, 2x CC ratio market. So why is it so that even with that, your CC ratio on a overall basis is like 1.3x or lower?
So when we go for premium products, blending ratio comes down.
Okay. And also like, is it also because like you are selling like a large part of your mix is still OPC in East India? Is it also because of that?
Yeah, you are right. Around 40 to 50% is OPC.
Sure. So do you plan to kind of, actually for me, if I think of it, it's quite an easy low hanging fruit for you that like if you can just sell more blended cement in East, which is anyways a market which sees that kind of a mix. So then in that case,
not necessarily, it all depends upon price. If you are able to get very good price,
okay.
There are certain specific projects like defense projects, they want our cement. And it is only OPC. I want to tell you, this is the OPC cement. So nothing wrong in selling OPC. It all depends upon price. See, okay, the blended cement always does not mean that your realization or your contribution is going to be better. Not necessary. Sometimes if you give some special type of OPC, then your realization can be much better than blended cement also, even after CC.
Okay. Okay, sure. Thanks for that. Yeah.
Thank you. We have our next question from Mr. Rajesh Ravi. Please go ahead.
Hello, am I audible?
Yeah, you're audible, Mr. Rajesh.
Yeah. Hi, sir. Congrats on great set of numbers. Very strong volume growth. And as you guided the second half also, you could replicate this volume growth of 1H. Just on the capex front, if I have missed it earlier, what is the total capex guidance for this financial year and next year one? And second, for the Kurnool project, you mentioned the incremental capacity addition will be around 1 million ton clinker and 2 million ton grinding.
No, the clinker will be around 2.5 million.
Okay, and grinding would be how much, sir?
Pardon?
2.5 is clinker, you right?
2.5 is the clinker.
And what will be the total cost for this project?
That will be around, I told you it will be around $40.
No, in absolute value, what will be the total cost?
Around, without obligatory charges, it will be around 700 to 750 crores.
Okay, including all mining land and all, everything is 750 crores?
Already mining land is purchased.
So that is over and above this 750 crores?
Yeah.
Okay. And this total capex for this financial year and next year, sir?
Yeah, total capex for the this year will be around 1,600 crores, 1,600, 1,650 crores. Next year will be around 200 to 250 crores.
This
for the whatever the ongoing projects, I qualified ongoing projects.
Okay.
So whatever projects to be approved by board, that will be extra.
Okay, so this includes your normal maintenance capex, or these are only for the
ongoing projects? Normal capex will be another 100 to 200 crores.
Okay. So around 1,800 odd crores would be total capex for this financial year.
No. This year, including normal capex, will be 1,600 crores. Next year, I'm telling.
Okay. Next year, so 1,600 odd this year, and next year 250 crore plus maintenance capex and additional whatever may come up.
Yeah.
Great, sir.
They does not include whatever WK charges and packing non-underground. Whatever ongoing projects.
Great, sir. Thank you. All the best.
Thank you.
Sir, I have a question. This is Harsh here. I have a question, sir. How are we seeing the demand scenario panning up in the election-bound states in AP, Telangana, sir?
So demand is good, yeah.
So,
in all market demand is good.
So are we not seeing any obstacles and demand slowdown due to the election? There is no such thing.
See, my study, I will tell you, now the demand is mostly fueled by infrastructure projects which just started. So the government is not afford to stop these infrastructure projects because, once these projects are delayed or stopped, then there will be huge NPA. Then the banking system, whatever problem we had in 2014, will be multiplied 3-4 times. That is my assessment.
Right.
So whatever the demand from the infrastructure project definitely will sustain for at least 2 to 3 years minimum.
Right.
So take for example Tamil Nadu, take Chennai. Now we have seen first phase of metro, now second phase. So almost they want to go for 200 kilometers. Like that, they want to go metro in Madurai, metro in Trichy, metro in Coimbatore. Just Tamil Nadu alone, I'm telling.
Yeah,
see, like that, different cities they want to go metro. Once such things are happening, then once you start, you can't stop it. Then cost overrun will be huge. Infrastructure companies, they are not afford to. Even the government is not afford to slow down or stop because they can't have another problem like 2014.
Right. Okay. Thank you, sir. So we have next question from Naveen Sehdev. So please go ahead.
Right. Thank you for the opportunity. First of all, apologies, I got logged off. Sir, just a clarification. You mentioned volumes in the second half will be good as in the first half. So did you mention the growth rate of 30-35% year on year or absolute volume?
Absolute volume, I'm telling you.
Oh, okay. Thanks for the clarification.
Whatever first 6 months, volume will be repeated. Second 6 months, a little bit more also we can do. But normally fourth quarter will be very good. So more also.
Exactly. So that's really, that clarification is really helpful. And second, sir, question was around the incentives. Any reason why we don't have incentives? Because other states, typically in East, a lot of these companies claim incentives in Odisha and other states. I know West Bengal is a little difficult to get, but Odisha, I thought, does offer incentives. So what's the, I mean, I saw in your presentation that we don't have any incentives.
See, Orissa, we have put up the plant after the D-Day. See, they have put up a cut-off date. Whatever plant put up before that date only eligible. What all the grain yields come along with us, they are not eligible for the grain incentives.
Understood.
In Orissa,
Understood.
Bengal, as you rightly told, see, you can recognize only in books. Maybe we submitted application, even they are not taken up our application. And in South, they are so-called very developed states, so incentives are not available to us.
Understood. Understood. And just one last question, and sorry if it's a repeat, but what will be the absolute peak net debt to EBITDA within which we will want to do our capex program? I understand you mentioned in your initial comments that board may approve line 2 at Kurnool very soon, and also understand that limestone which we acquired comes then very handy for the same. But in terms of the net debt to EBITDA framework, what will be the absolute peak? Is it 3x? Is it 2.5x? How should one look at it?
Ideal will be 2x. So that is how I want to work.
Okay. Okay. Understood. That's really, really helpful. Thank you so much.
Thank you. So we have our next question from Mr. Pratik Maheshwari. Pratik, go ahead.
Thank you, sir. Thank you for the opportunity. Sir, I have one question relating to the East, your East operations. So just wanted to understand, sir, over the last 2 years, how's the presence in the other markets apart from like your South West Bengal, like for the Jharkhand, Bihar, and North Bengal, which was planned to kind of you'll expand your presence. So how has that shaped out? Like has the share of your volumes in East has increased in these markets, and so what's happening there? And another question, sir, just wanted to understand, since you're saying that you do not have a lot of reserves in other markets apart from the Karnataka. So what is your perspective on inorganic expansions? There are a lot of assets that have come in, but we have rarely seen your participation for these assets, apart from just recently bought Prism. So just wanted to understand, sir, your perspective on the both aspects.
No, Prism is only land. I have not acquired any plant.
Yeah, correct, sir. So that's
so. Let us
correct, sir. But
it is not. I can't say it is inorganic allocation. It is only land with limestone.
Correct, sir. And that's the reason, sir. Like a lot of other assets which have also been bought in by your peers at attractive valuations, but we have not seen your participation while you have a very solid brand to enter any other region as well. So just wanted to understand from these 2 points.
So at any point of time, whenever we internally assess whatever we are seeing, whatever the incremental investment in our own area in both Tamil Nadu as well as Andhra Pradesh is going to be much cheaper than whatever available inorganically. That is the main reason where our mental block is okay. When organically, when you can grow by with some $40 or $50, going to pay $120 or $130, which is going rate today in the market. That is the only and main reason.
But sir, that would help you improve on the concentration that you have with your south plants, right? Or would that?
But I agree with you. At the same time, whatever the capacity we are able to fill up. We expanded from 12 million to 22 million, 20 or 22 million tons. We are able to grow. When I have growth opportunities, what is wrong in growing in this area?
Okay. And sir,
another thing I will tell you. See, 80s and 90s, they were era of South. See, the South was growing almost by 14-15%. At the time, northern states, they were growing only single digit. See, afterwards, southern states, we have maybe political instability or there's no good leaders in this area. So to that extent, the growth in South has come down, but I am thinking again, the glory of South will come where we will have double-digit growth. Once the double-digit growth comes, then whatever growth possibility by Ramco Cement can be absorbed in the market. Yeah.
Got it, sir.
Vaidyanathan here. See, in about 15 to 20 years from now, you look at only north and east, north and south will be producing cement. Rest of the regions will only consume cement from these two regions. Central to some extent.
Got it, sir. Sir, would you also comment on the part that I asked for the east markets, sir? How's that panning out your presence? Are you expanding your presence into Jharkhand, Bihar? So basically West Bihar and North Bengal?
Not much.
Not much is happening.
West, see, Bengal we've gone for because at that time we are doing by ship also. See, there are certain strategic reasons why we have gone for Bengal as well as in Orissa. Southern Orissa is very near to our Vizag grinding unit. That is why we expanded the Vizag grinding unit. We doubled our capacity. Also, we are largely present in South Orissa also. And the coast of Orissa also very strong. And Bengal, this is the plant where they have given us land inside a thermal plant where at that time they were promising a lot of fly ash available almost free. See, these are the reasons we've gone for that. So now certain those things are not available. Those facilities may not be available any longer. At that time they were promising me unlimited availability of the fly ash and all these things.
Okay, sir. Sir, got it. Thank you, sir. Those were my questions.
Thank you. We have a follow-up question from Mr. Rajesh Ravi. Rajesh, please go ahead.
Yeah, sorry, sir, missed again on this volume commentary. What you answered to an earlier participant. So first up, you grew almost 30% plus. So what is the outlook for the full year you're looking at, sir?
We'll be doing around 18 million tons minimum.
Okay. So 20% volume growth, what you're looking at for the full year?
Yeah, 18 plus.
Okay. And sir, this wind, are we booking any sales revenue now, or it is totally getting consumed captive?
I told you 100% captive from June.
Now it is 100% captive from June quarter itself, or month of June.
June 1st.
Okay, 1st June. Okay.
But generation will be peak only this quarter.
I understood.
The
external sales is now.
Third quarter will be very weak. Fourth quarter will be some generation.
Okay, understood. Yes, generation is generally peaks out in September quarter.
When I told you this quarter, the second quarter.
Yes. Okay. Great, sir. That's all from my end. Thank you.
Thank you. So, as there are no further questions, I hand over the call to the Ramco Cement management for their closing comment. Over to you, sir.
So, I think we had a wonderful interaction, and I must thank all of you for your active participation and all the queries which you have raised. I think we believe in transparency, and we hope that we would have answered all your queries to the best of your satisfaction. So we would like to close this meeting, and I would once again like to thank all of you and wish you all a very happy Diwali. Thank you.
Thank you, sir. On behalf of ICICI Securities Limited, we thank you for joining us on this call. Thank you and happy Diwali.